Hello guys, there's a good buying opportunity on NZDUSD. That's a New Zealand dollar paired against the US dollar. And if you stick with me to the end of this video, I'll be showing you where and how to take advantage of this buying opportunity. So without wasting much time, let's get to it. I'm currently on the monthly time frame for NZDUSD, and we're going to be working our way down from those monthly time frame to the much lower time frame where we can get this buying opportunity. So on the monthly time frame, I basically, as always, try to get my directional bias as well as mark out my major key zones, which are those rectangular bars that you're seeing already on my chart. So the next thing we'll quickly do will be to get our directional bias. And to do that, we can just zoom in a bit to see what NZDUSD has been doing for quite some time now. Since 2020, NZDUSD has failed to break beneath this major support zone. In other words, each time price goes to this area, it pushes upwards almost immediately. And then if we look at the market structure, one might be deceived to think that it's a bearish market structure, which wouldn't be far from the truth. So if we actually place our trend line here, we can see that, oh, it's had been trending downwards for quite some time, albeit with this major support level forcing price at every point in time from going below. So if I zoom closer to see the most recent happening on NZDUSD, we could see that price though was rejected at this support level. It wasn't just rejected. Rejection was as a result of the formation of what? A double bottom. And of course, we know that the double bottom is a very, very strong bullish reversal chart pattern. What that means is that when price of the market is going downwards, or when we have a strong bearish trend, and at the appearance of this candlestick chart pattern, then there's a strong probability that price wants to push upwards. And if we look at what followed, there was an upward push indicative that buyers want to push the price upwards. If some people will say, what about this internal trend line? If I draw this internal trend line, we can see clearly that the bullish candle clearly closed above the internal trend line. So this makes me want to give precedence to this external trend line, albeit even though bearish. So if I take this as the neckline of my double bottom, then my expectation would be that price would be doing everything to head to make a third touch of this trend line, where this would be the first touch of the trend line. We'll have a second touch of the trend line, and then we'll be having like a third touch of this trend line. So if the trend line or this resistance level is broken, then price could continue upwards. However, albeit with what I've just been able to explain, my directional bias, regardless of what seemed to be like a downward moving market, would be what? Bullish. In other words, as we go further down, I'll be keeping an eye on the market movement to see if I can get what? That buying opportunity to push price back to this resistance zone. So what do we do next? We'll go to the next lower time frame, which is the what? The weekly time frame. Now, on the weekly time frame, what can we see? Now, there are a few things that I want to quickly point out to us. First, this was the double bottom that we saw from the monthly time frame. And on the weekly time frame, we can see like another structure, which is like a bullish structure, because we have a high, a higher low, a higher high, and then we'll have the market making a retracement. And not just that, I can also spot a chart pattern. Remember, most times on the weekly time frame, I try to look for what? A candlestick chart pattern, that we can work with or hinge our analysis going forward on. And what I can spot here is an inverse head and shoulder pattern, which is also a very, very strong bullish reversal chart pattern. So this will be my left shoulder, the head, and the right shoulder. And of course, the neckline would be this level here. And just to make sure that the neckline, we're not drawing it independently, we can always extend it to the right to see if it has a past history of acting as a support, and then we can also extend it to the left to see how credible it is. So if I'm to come all the way to the left, we can see that this neckline that we've drawn has acted as a support in the past, just as we can see on several occasions. So what else can I add um, to make my case for my buying opportunity? Another thing I can add here would be what? My bullish trend line. And of course, we can see that for this bullish trend line, we have one touch, two touches, and a third touch already of this trend line, giving it a lot of what? Credence. Then I can also bring in my what? Fibonacci retracement tool from the swing low to the swing high. And from what we can see, the beautiful thing about this setup here, if I zoom in, is that everything I've drawn independently seems to form a beautiful confluence for my setup. So I have an inverse head and shoulder bullish reversal chart pattern in which the neckline is now coinciding with what the Fibonacci retracement to golden zone, which is the area between the 0.5 and 0.618. And price had just retraced into this area, which is also being held by what? The third touch of what? Our bullish trend line. So the question would now be, what do I do with this setup? All I need to do now will be to go to the daily time frame to see the most recent trend of the market. And voila, looking at it on the daily time frame, it becomes even more beautiful because now we can see the clear inverse head and shoulder pattern. We can see our what Fibonacci retracement with price just at the golden zone, coinciding with the neckline of our inverse head and shoulder pattern, making the third touch of our trend line. And if I zoom in, there's something we can clearly observe that this Fib golden zone has rejected price for the past 4 trading days, 1, 2, 3, 4, which means that we have the presence of a lot of buyers here waiting to push price upwards. So what do we make, or what do we do with this setup? Because this is a very, very beautiful setup. All we now need to do will be to go to the much lower time frame and apply our different entry criteria. So if I go down to the 4-hour time frame, the first entry criterion that I would want to apply, which I've talked about severally, would be by putting what I call a counter trend line. Let me use another color for this. So by imputing what I call what a counter trend line. So this is the 4-hour time frame. What this simply means is that once this counter trend line is taken out completely and there's a pullback or a retracement, then I can start looking for my buying opportunity. So what our advice would be that we'll patiently look at this setup, and we can even go more to the refining time frame. Now on the refining time frame, can see that another way we could get into this market, apart from the counter trend line mechanism, might just be to wait for this last leg of supply to be taken out. In other words, I can place this here, just wait patiently for price to do this. Once there's a pullback, then I can start looking forward this buying opportunity with my stop loss underneath this level, and my take profit, I could ride this all the way up or just look forward. That's 1 to 3 risk to reward. Let's not forget that from all indication, because of this Fibonacci retracement to then this could take us all the way here. So this is a risk to reward of 1 to 4. So let's zoom in again for us to see clearly. So this is the H1 time frame. So all this particular setup would require would be our patience. And let's not forget this pullback might not come into this neckline. It might come all the way down here and can even give us what? A much more better risk to reward. So this is my take on NZDUSD. Like I always advise, you can compare this with your analysis. And another thing that I might have failed to say in some of my other videos is that we must be very mindful of our fundamental analysis this period because of what's going on globally by reason of war between Iran and the US and some other countries that are involved. So any little thing could spook the US dollar. So this should be the time where the Forex factory sites like my Forex factory should be your very, very good friend. So from time to time, you must check to see what's happening with the dollar. But for now, technically analyzing the market, this is my perfect take or outlook for NZDUSD this trading week. So if you are lucky enough to come across this, you can compare it with your analysis and patiently monitor the pair so you can take advantage of this buying opportunity. So this is Oba FX Trading Academy. If you want to learn how to analyze the market like this, you can always reach out to me via the details on my YouTube channel. Do have a wonderful trading week ahead and cheers.